I have a very special interview for you guys today, especially one of the most important interviews we'll do in the second half of 2017 going into the rest of the year. There are some huge fundamentals, underlying fundamentals supporting the precious metals, a higher precious metal price in the near term and the long term. And I've got the two best guys that I know of to speak with specifically about silver and the precious metals in general. Our first guest is a top expert. In fact, if you're looking for the most original content, I would suspect that many other analysts are using his original content to create derivative analysis of their own. But really the source in a lot of the best silver research out there right now is consistently coming from the SRS Rocca report with Steve St. Angelo. And the second guest is somebody who is nobody needs an introduction to this guy if you've invested in anything with silver. Legendary mining entrepreneur and investor. He's the CEO of the world's purest silver producer on the planet, Mr. Keith Neumeyer. First, Steve with SRS Rocca Report. Thank you for joining us today.
Yeah, great. It's been an interesting time. We've seen some volatility in the markets and the precious metals, but we're starting to see some interest now in the price. So it looks like it's going to be interesting the rest of the year, Dan.
Great day to interview you guys, right? Silver is up big. Keith, with First Majestic Silver, trades on the New York Stock Exchange under AG. Thank you so much for joining us.
Well, thanks, Daniel. I actually, it's kind of funny because I put an order in to buy some silver last night in the market because I just saw very unusual trading patterns. It's just the support that came into this market and the fundamentals that I think are building. I think there's some big money coming into the silver sector, and the move overnight and then today. Unfortunately, I didn't get filled on my order, but I was very close. I was only 5 or 10 cents away.
Well, this is going to be a great interview. If anybody's invested in physical silver or the mining shares or just interested in silver or macroeconomics, both of these gentlemen are the go-to guys. Keith Neumeyer, let's start with you. Between the strikes, a stronger peso, and higher energy costs, First Majestic Silver reported a reduction in earnings and silver production. My question to you is, are the mine strikes resolved? And secondly, for the higher energy costs, is this a problem that can be resolved only with a higher silver price?
Well, we could talk for probably half an hour on this topic, Daniel, but the strikes that have taken place is just really a culmination of what's going on in Mexico. Unfortunately, the current government increased taxes to the entire population. Income taxes, that is, and also they increased energy costs. So, the oil price or the gasoline price at the gas station increased by 30% in January of 2017. So, worldwide oil prices are dropping, and yet the Mexican government increases gas costs. And, the Mexicans aren't stupid. They know that energy costs are much lower, yet, they're having to pay higher prices at the pump. And, they're looking for ways to mitigate that increase in taxes, that increase in living expenses, and they're going to their employers, and it's just not mining, but we're hearing there's challenges throughout all of Mexico. The employees are just looking to try to try to get something to compensate for their increases in their cost of living. So I quite honestly don't blame them for their activity. We've been very active in working with them. Obviously, sometimes you have rogue, operatives that sometimes cause more problems than they're worth. And we've been working with the unions, and we've got some really good concessions, from the three unions that we're active with in Mexico. I don't want to get into details, but the concessions that we've been given over the last couple of months are really going to help out a lot in our improved productivity. But the mining sector as a whole, this is something that mining investors that is should really be aware of, is that the entire mining sector is going through a complete change. I just had a presentation from one of my head technical services individuals internally, and we're still using technology that's 100 years old, in some of our mills. And there's not an industry in the world that is still using 100-year-old technology. Is actually quite shocking. There's a lot of really exciting technologies that are coming into being in the mining sector that is going to turn the mining sector into much more profitable, much more efficient business. And unfortunately, this will have an impact on employee numbers because, as we automate and as we bring new processes and new technologies into this business, that will affect employment. And I think that's just natural across all industries. And that's something we have to be very sensitive to. But it is happening in the mining sector, and I'm excited about that. But to your point regarding higher metal prices, it is very difficult to really expand these operations at current prices. The business is, we're making money. There is a margin there, but the margin is quite tiny at current metal prices. And in order for us to really expand production substantially over the next 5 to 10 years, we need much, much higher silver prices.
Steve, you recently reported on the silver production plummeting for some of the top silver miners. Is this in line with what you've been forecasting with your own research, or do you see these as a temporary situation?
Yeah, Dan, for the most part, that was more of a curveball, a wrench thrown into the engine of several of the mining companies. And Keith explained some of the reasons why for First Majestic, but this is also true for Heckler. They're dealing with a strike at the Friday mine in Idaho. And then we have the big shutdown of Tahoe's Escobal mine. And that's a big one because that one mine's producing over 20 million ounces a year. But they may have more issues because it's a much different situation than what the Mexican people are dealing with in Mexico than what's happening in Guatemala. But I will say this: I think silver production in the primary silver mining industry, if we remove this temporary setback, will actually continue to actually be stable or even grow. Because I know Andover Silver, they planned on still growing production. They're just dealing with some issues now. But some of the mines like Silver Standard and most mines are still dealing with falling ore grades. But that being said, I do think overall primary silver mining production will continue to be stable or slightly grow. Where I see the problems, and we could talk about this maybe, but I see the problems coming in the base metal mining industry. And 70% of silver production comes from base metal and gold production. I think 54% or 55% is from zinc, copper, and lead. When the markets really start to crack from all this inflation, all the very inflated markets, I do see reduction in the base metal prices. I do see falling off base metal production, which will bring down the silver production, global silver production. But I do think the shining light when that happens, Dan, is going to be the primary silver mining industry.
Well, let's kind of focus on the primary silver industry real quick, since you both brought it up. And we'll start with Keith. And this is kind of a controversial question. I'm sure your answers will be different. And Keith, I don't want you to upset anybody that you have to see every day on the streets of Vancouver. But let's talk about the primary silver producers, because I'll get a list and there's a handful of companies, a dozen companies or 24 companies. And every time I look at that list, I kind of just sit there and go, I'm surprised they still consider some of these companies primary silver producers. And I'm not going to mention any names unless you guys want to, but Keith, you might know this off the top of your head, but how many companies that are publicly traded, how many companies generate revenues of over 50% from actual silver sales? Because I know there's a ton of companies calling themselves silver miners, but actually they could just as easily call themselves gold companies or copper companies.
Yeah, well, it really depends on how low you want to go down the ladder, Daniel, because, there are small companies that are producing, 50, 100,000 ounces of silver a year, and that's all they produce. But 100,000 ounces of silver is a drop in the bucket. So for the North American publicly traded companies that are of size, there's really only two that are over 50%, and that would be Pan American and ourselves. Tahoe used to be there, but they're no longer there. They ended up buying some gold a gold mine in Ontario, which changed their purity quite a lot. Silver Standard and Coeur d'Alene have long left, the silver producer category. Silver Standard is just in the process of changing their name. Wheaton Precious Metals, used to be called Silver Wheaton, is less than 50%. So, yeah, it's quite shocking, actually. When I put the company together, 2017 is First Majestic's 15th year in business, and there was legitimately a good handful of companies that, quite honestly, I looked up to, and were legitimate silver producers. But you talk to those CEOs today, and it's not like they did it purposely to get out of silver. They wanted to continually grow their business, and the only way they're able to grow their business is by buying gold mines. And it's interesting that gold mines are much easier to find than silver mines, and we're only that's a shocking stat when we're trading at 75 to 1, that silver mines are actually so rare. And we're only mining 9 ounces of silver for every 1 ounce of gold. So I think there's a complete disconnect in the marketplace, and eventually, the market will catch on to this phenomenon.
Steve, since you started publishing your reports, which are literally the best reports, best charts out there, have you also been following this development where the primary silver producers, reported primary silver producers, are not so much primary silver producers anymore?
Yeah, it's true. Keith just mentioned that, and I would say this though: if you look at their revenues, and you'll start seeing that they're selling more gold, copper, lead, and zinc than they are in silver. But if you look at their silver compared to, let's say, zinc, or look at their silver compared to copper, they're still producing more silver than any of those individuals. But again, this is the issue. A lot of the big primary silver mining companies, they were big in the late 1800s and early 1900s, and now we just don't have a lot of them anymore. And so, to produce silver, you're bringing up a lot of ore that has a lot of other metals in it. And so it is true. There's a very handful of what we would call true primary silver mining companies. But you see, that's still not a negative thing. Even though, let's say, another company, a primary silver, is actually selling more copper, lead, zinc, and copper than silver, it's still producing a lot of silver. And I do think in the future, the primary silver miners, even though they have more revenue coming from the base metals and gold, I think they're going to do very well because they're much different than a base metal miner that's producing a little bit of silver and a lot of copper and zinc and lead. So I do see this ongoing change in this switch from primary silver to more. Let's just say it's a metal producer, which is producing a lot of silver. That's actually another way to describe a lot of the primary silver mining industry.
Sure. And Steve, with copper, gold, and zinc prices rising, does this throw a lifeline into the future supply of silver and the production? Because as you stated in this interview, most of silver is a byproduct from other mines. So if the other metals are rising, will this ultimately mean more silver production, keeping a lid on the silver price?
Well, it may be temporarily, because I look at the markets today, they're being propped up by central bank intervention, massive asset purchases as well as money printing. And that's what we publicly know about. So where does that go? That goes in stocks, bonds, and real estate. Now, over the last 4 or 5 years, the metals as well as energy and commodities have been hurt. You can't have a very functioning economy if you're hurting the actual physical economy, especially the metals, the energy, and the precious metals. So even though and this is the issue, all the demand for copper that's coming out of China and all the demand for the base metals is based upon a very highly inflated and propped up market. So when that starts to fall apart, Dan, we're going to see the prices of those metals fall, and then we're going to see the production of those metals fall. I'm not quite sure when this timeline is. It could start happening this year. It could take a few years, but this is the issue we're going to see. And so I look at the base metal. I am not a big supporter of the base metal mining industry in the future. I'm not saying in a year. I'm talking, let's say, within 3 to 5 to 10 years. I think the base metal mining industry is going to be not a go-to asset. They're just going to survive on their best quality ore, and then but the primary silver miners are going to benefit from this scenario. So that's how I look at it, Dan.
Keith, I recently saw President. Go ahead, Keith.
Yeah, I'm just going to step in because Steve has made a couple of really great points, and he's talking about the primary silver producers, and I think he's dead on. And the base metals help, and right now the base metals, we produce very few base metals, but the fact that zinc is at $1.30 and copper's at almost $3 now, and lead's at $1.10, and these are good prices, and these are helping us. They're helping other primary silver producers, and don't forget 70% of our revenue is from silver, which makes us the purest silver company in the world. We'll hit 80% next year, which is quite unusual in the whole mining space to have so much revenue from a single metal. But yet these higher metal prices are really helping us out as a result. So I agree with Steve that I'm not a bull on lead and zinc and copper either. I think long term these metals may have challenges, and but the miners that are predominantly precious metals, silver or gold, are going to be the companies that really shine going forward.
I was recently at a Sprott conference in Vancouver. The person doing the presentation was from Sprott. She showed a silver and zinc chart, and basically it was the only two metals that faced an imminent shortage where demand was going to far outpace supply over the next decade. Keith, when do you think the supply and demand fundamentals for silver will reach an inflection point where we see the price in a situation where it has to rise?
It's interesting because you mentioned zinc, and I've got a big zinc investment, and I am bullish on zinc short term. There's been several zinc mines that have been shut down around the world, and zinc is a pretty critical metal. There's some analysts out there that are thinking that zinc can go to $2, or I've even heard of higher numbers. And but the interesting thing about zinc is that it's a pretty common metal in the Earth's surface, and it's just a matter of delay by the time investment starts to the time production can increase. So over the as the price goes up, there's a direct correlation to increase in production worldwide. Is really what I'm getting at. It's quite a bit different than for silver. Silver grades, silver production, silver is rarer than I think anyone really takes into consideration, and it doesn't have that same relationship. And I think First Majestic and many other miners out there have proven that. We're increasing investment, and a large investment. We're increasing investment by 100% compared to a couple of years ago, and our production is still declining. We hope that that's going to change. We're optimistic that through development, through exploration, and our technical guys are pretty smart at what they do, and we're optimistic that we'll start to see increases in production in 2018 and 2019 and beyond. But it's not that same relationship. And what we have happening in the silver space is we actually have increased consumption. We don't have the same dynamics in zinc where we're seeing increased consumption of zinc. We just see a short-term supply concern or supply constraint in zinc due to lack of investment and low prices over the last few years. But silver is actually extremely rare. And as we're increasing consumption of the metal, production is having a real challenge in keeping up. And I think that dynamic is going to converge, and that's going to hit headlines. And I don't exactly know what the catalyst is going to be. I've said a couple of times, I think it's going to be a supply disruption. I think that, Sony or Apple or Toyota or, one of these big consumers of silver are going to just stop producing, their product because they can't get the metal. And that's what's going to hit the mainstream. That's going to hit the headlines. And all of a sudden, the world's going to wake up and say, hey, silver is way rarer than people think it is.
Ultimately, the audience is dying they're focused on price, right? They want to know what's going to happen in 2017. What if has it bottomed? And let me just start off with this, Steve, to you. What, in your opinion, is more influential to the silver price? Supply and demand fundamentals, central banks, or energy?
That there's two ways to answer that question. And Keith was talking about what we have been looking at the silver market, and I call it the more orthodox view of silver, which is based on supply and demand. And this is also the Austrian School of Economics. They look at supply and demand. And yes, it is true. So we saw this with rhodium about a decade ago. It just went ballistic because of the demand for rhodium. And so there is a definite point when, with all the solar demand for silver, all the bacterial hospital use for silver now, there's probably going to be a lot more demand for silver as we're starting to see an overall decline in production. So that should impact price. It should. But the unorthodox reason, and this is the biggest reason I look at, is that to me the biggest factor of silver has been energy. Even though supply and demand, Dan, and I agree with Keith, offers the price, let's say the price of silver and commodities, metals and energy, that's short term. So if you would take energy or corn production or silver production and you look at it over a 20, 30-year period, that cost or that price of silver is based on energy. It's based on energy in all forms, which is labor, which are supplies, materials, and capital. Most of the capital expenditure comes all the way back from all the energy in all forms to make that capital. And so, but what I see going forward, it's the central bank intervention now. Central bank intervention has destroyed the real fundamental value of gold and silver, because you see, silver and gold are not really based upon their cost of production. They're not consumed like corn. They're not consumed like energy that is burned and gone. They're saved, and there's a lot of it that's being saved. So they're used as money. They are competing with the 300 plus trillion assets out there of stocks, bonds, and real estate. And those are being inflated by the central banks through asset purchases. So I look that right now, the fundamentals of gold and silver are still being based upon cost of production and some supply and demand. But in the future, when energy becomes really problematic, and it will, it's going to cause huge disruptions in the value of stocks, bonds, and real estate. And that's when we're going to see the real store of value price of gold, especially silver, rise to levels that we can't think are manageable. And I have believed that now for years. Nothing has changed my opinion on that.
Keith, same question. What is, in your opinion, the most what's the most influential on the price of silver? Supply and demand, central banks, or energy?
Well, I think it's sentiment, actually. So I wouldn't pick any one of your three choices. It's interesting, Josh Crumb, who I'm sure you know, with Gold Money, he draws a direct correlation with gold prices to energy costs, and it's an interesting thesis, and I'm not going to dispute that, but supply demand fundamentals have long left this marketplace, and we don't have a market globally in any market. I'm not just talking about metals, I'm talking about all markets where supply demand fundamentals make a difference at all. The markets, unfortunately, are driven by sentiment and headlines, and all the funds around the world, all the money around the world tend to chase the same trade. And that's why we have these huge gyrations in markets around the world, because everyone's doing the same thing. They're all educated at the same universities. They all have the same, algorithms. They all use, and they're all talking to each other on chat messages or telephones, and they're all, it's a very interesting marketplace that we're in today. Quite different than what we were experiencing back when I first got into this business. But it is what it is, and when that sentiment changes, that's when gold and silver will start to move, and we saw a glimpse of that in early 2016, where the inflation trade became norm for a very short period of time, and now we're in this kind of deflationary trade, by US dollars, by tech stocks, and until that changes, then I don't think we'll see much change in the market. And I look at the current state of the market very similar to where we were in 2000, 2001, where, the NASDAQ hit 5,000. And it wasn't really until 2002, after the NASDAQ, crashed for, a good year or so, that the money actually started coming into the metals. And I think that's where we're at. And I don't have a crystal ball, but I'd be putting money into the gold and silver space right now, because I think we're at that inflection point. It's coming soon, but Daniel, you know how quickly these things change, and when they do change, it's often too late to make a move.
All right, Keith, I want to move on to the what are your thoughts around the mining shares? Obviously, you've built $2 billion companies in this industry with First Quantum Minerals and First Majestic Silver. I was talking to Rick Rule the other day. He said he's 100% confident that we're in the third inning of a bull market that started in late 2015. So with kind of closing out this discussion on silver and precious metals, what are your thoughts on the mining shares?
Yeah, look, I respect Rick a lot. He's been in the business, probably, I think, around 10 years longer than I have been. And, he's seen at least one more cycle that I've witnessed in my 35 years in this sector. And I would agree with him. One interesting thing I think, investors forget, and then, of course, it's always said that investors have a very short memory. But if you go back, from 2002 to 2012, where gold started that rally from $250 an ounce to $1,900 an ounce, and an 8 times move. And you saw silver go from $5 an ounce to $50 an ounce, a 10 times move. There was several corrections during that period of time. And there was a couple of corrections during that period of time that are actually 50% corrections. And that's exactly what we've seen from the summer of 2016 to the summer of 2017, is basically a 50% correction. The action right now, I'm actually very excited about the action right now. I think that these stocks are basing out extremely nicely. There's lots of strength coming in this market. The big money's not there. The big money's still on the sidelines. It's still chasing the NASDAQ, still chasing the FANG stocks, and so on and so forth. And I think that's great, for the average retail investor out there to be ahead of the big money. I think that's critical. And I'm all in. I've said that 100 times. I was at the Brock conference, with you as well, Daniel. And I think one of my presentations was why I'm all in. And I laid out over a 30-minute period my PowerPoint presentation and the reasons why I'm all into this market. And I set many analogies to where we are and where I think we're going. And a couple just off the top of my head, the top 50 mining companies in the world have a market cap of $800 billion. The top 5 high-tech companies in the world, which are all U.S. based, of course, have a market cap of $3 trillion. So you got 5 companies versus 50 companies. The revenues of the top 50 miners are $510 billion. The revenue for the top 5 tech companies is $530 billion, so virtually the same revenue. And yet, if it wasn't for the top 50 miners in the world, the top 5 tech companies in the world wouldn't even exist. So, it shows you that there's no minerals. Like none of these guys would exist. So, there's this complete disconnect. For my money, I wish I bought Apple at $150. I didn't. I'm a mining guy, but I can. For my money, I'll stay away from that market, and I'll continue to be all in the gold and silver sector, and keep working diligently on building First Majestic and First Mining, because I think that they're in the right place at the right time.
Steve, your research, in my opinion, is second to none. Can you give us any insight on what you are writing or researching right now that the market and precious metal investors aren't appreciating when it comes to the future supply of either gold or silver or both?
Dan, I'm probably a broken record, and this is where I'm different than most precious metal analysts because I always look at the energy first. Now, I'm going to be brief on this because I want to explain something else. But all three of us in this interview can't do anything without energy. You can't drive a car. You can't you can't run your business. You can't have any electricity at your home. So the energy comes first. So that's where that's the root thing. The root analysis always should be on the energy and how it's going to impact everything. So I'm going to continue to put out information how that's going to impact the economy, the energy industry, and let me tell you, it's really negatively impacting the U.S. oil and gas industry. That's going to be a big problem going forward, as well as the precious metals in a positive way. But I did come across some very interesting information that I think analysts in the precious metal community are overlooking. In 7 years, we had a $224 gold price in 2010. And this year, it looks like it's going to be about at least $1,250. It's going to be higher. But the scrap market has fallen. The global scrap market has fallen by 17 million ounces. It was 54 million back in 2010. It's only going to be 37 million this year. So a lot of people are selling a lot less gold into the market. So that means there's going to be problems with supply. And lastly, I haven't wrote the article, but even though U.S. gold ETF since last year, the quarter first of 2016 to 2017, the gold ETF in the U.S. industry market has been about the same. But we're seeing Germany and England. It's increased more than 250 tons. And now this is different than precious metal investors who buy physical. This is institutions and retail investors, and that's a different market. So in just a year and a quarter, we're seeing a very big increase in German and British increase in their gold ETF flows. So that means there's a problem in Europe, and that's either with Russia, dealing with Russia, that's dealing with the European Union and their constant asset purchases and money printing. So I think there's a powder keg coming, and we're starting to see it out of Europe, and it's also the big demand out of Asia. So I look forward to seeing a lot more trouble in the economy. It's going to happen, and this is going to be very positive for precious metals going forward. And if anybody would like to read any more information, they can come to the SRS Rocker Report site, and I also have a new Patreon account if they want to support me there as well.
All right, everybody. You really can't go wrong or have a safer bet than really going to these two gentlemen for answers on silver. Keith, of course, on the front lines, running the purest primary silver producer in the world, First Majestic Silver, which trades on the New York Stock Exchange under AG, and Steve St. Angelo, who's running the SRSRoccoReport.com, where I honestly see this as the best place to get research on silver. So if you're buying physical metal, or you're about to consider investing in the mining shares, you need to know what's going on fundamentally behind the scenes. And as far as I know, this guy is really the only guy coming up with really, really new stuff, rather than just rehash stuff. So, and I say that not to down anybody else, but just to give you guys an idea. This guy has some really killer research, so everybody should be checking out his website. Again, Keith Newmeyer of First Majestic Silver and Steve St. Angelo of SRS Rocco Report. Thank you so much for your time, gentlemen.
Yeah, thanks, Daniel, and follow me on Twitter, and feel free to go to First Majestic's website. And if there's additional information that is required, please give the company a call at any time. We're happy to take people's telephone calls.
Yeah, thanks, Dan. It was a pleasure. Hopefully we can do this again in the future.
No, looking forward to it. Thank you.